I think there's clearly the amount of money that they're trying to sort of reallocate out of China is an immense amount of money, and it's not going to get spent quickly. So I think it's going to be with us for some time, particularly because these guys are putting up big development projects. They're not putting up, they're not buying standing investments. They're investing in enormous infrastructure projects that have 15 to 20 year life cycles to them. So I think they're going to be with us for a long time. I also think you have to sort of, if you think about the US capital that flows into Europe, it flows in largely focused through the distressed debt pathway. So I think when you talk to a US capital, guys who are allocating capital out of the US, what they're very excited about is the continued restructuring in the European banking system and the opportunities that come with buying assets at well below face value of loans, which have been under capex over time. When you talk about Asian investors about Europe, they're less focused on that. They're more focused on the profound shortage of core that's coming. I think one of the challenges we face is that in 2 or 3 years' time, there aren't going to be very many core buildings to occupy, and there aren't going to be very many you can buy. And so what they're doing is coming in as the next generation of guys who are building the next round of what will be the new core asset that'll get traded out into the market. But I think they're focused on just different bits of the capital stack. But absolutely no doubt in my mind, those guys are going to be here for a long time because the infrastructure they're taking on is 20, 25-year infrastructure. It's not 2-year turns.
And the other thing to add to that is that the rising middle class of China, they were encouraged to get educated abroad, but were told to come back. The new generation is being encouraged to go abroad and stay abroad because of the pollution issues, etc., they've got in China.
Interesting. Marcus, did you have a point you want to write?
Maybe when we talk about the Asian or sovereign wealth funds in general, I think it's only a very small pocket of the market we are talking about actually, because most of the time when they make their first investments in areas like Europe, they're not targeting the lower the volume range. They're targeting 100 million plus investments, whatever, just to make a reasonable investment and to make a point to deploy the capital. They're not looking at the buildings, let's say 15, 20 million. So I think it's a very small market, and the problem will be, is there enough, as Simon mentioned, core property out there in this area? And yes, they might be right trying to build a new core, but the location is not, they cannot duplicate the location, and most of the time they are building on the fringes of the existing market, hoping that that will be a core location possibly in the future time. But history will tell if they have been right, but traditionally the core market will stay in that area. So I think they will end up with something that might be a core product, but not in a core location at the end, when they realize in 10, 15 years. But at the other end, I think the majority of the transactions will not be influenced by this money at all. They will be more influenced by the thing Michael told, that the loan book of the banks are not increasing. And I think that is one of the indicators. Yes, Asian capital is equity, but the question is the banks with Basel III, they have high equity requirements. They are simply not like to take on a lot of property risk. They're going only for core in the classical locational sense. And debt funds, from my point of view, in some markets they might work. They're not working in Germany so far. That's because of the banking structure we're having there. And I think that will be more of the story in the years to come. How will we get alternative ways for financing for the real estate sector? Because debt funds in general, they work in certain markets but not across the European landscape.
Because that presupposes that you don't get a whole bunch of Chinese banks setting themselves up with banking licenses in Europe over the course of the next 10 years and fulfilling the role that historically...
But there are so many banks up for sale, actually, also in Germany. But maybe we have to also learn about to think in longer cycles. When you say 12, 15 or 15, 20 years, I mean, we see currently in Paris, La Défense undergoing a whole refurbishment, say one tower by the other, and in 15, 20 years' time, also the Docklands, this will be old buildings and demanding for a complete refurbishment.
I mean, it's one of the facts I think is very interesting about the UK market right now is that if you go up into some of the regional cities, their stock was last redeveloped in the late 1980s. And virtually the entire stock of office supply that's available to lease right now in a lot of UK regional cities is functionally obsolete and will be completely obsolete by 2020 because the regulations will put it out of use. So I think that people forget core location is one thing, but having a building on it that's functionally useful to an occupier is another thing entirely.